Welcome. You're watching the Mutual Fund Show on NDTV Profit. I'm Tamanna Inamdar, and this is a show that aims to bring you expert advice from the mutual fund industry so you can make smart choices for your investments. Now, today we're discussing NFOs, that's new fund offers, as an investment tool. Here's a bit of context setting. In a bull market like we are in right now, typically you have a slew of new fund offers. AMCs, mutual fund companies, all of them want to come out with more and more products for investors to come into. In fact, you've had record NFOs right from the year 2022, 2023. There are at least 20 odd NFOs on offer just for the month of February 2024. The question that we're tackling today is whether an NFO is actually a good investment option. So an NFO typically comes at a face value of 10 rupees, an NAV of 10 rupees. You can equate it in a sense to an IPO, except of course, you don't have an immediate listing price, etc. It becomes attractive because of its NAV of usually fixed 10 rupees. The question is that whether it's the right choice. When should you go for an NFO? And we're going to get you the pros and cons, both sides of the story today when it comes to new fund offers. I'm speaking now first to Kalpesh Ashar. He's CFP of Full Circle Financial Planners. I will also be speaking with Alok Singh, who's CIO of Bank of India Investment Managers. They in fact have an NFO out, and we'll ask him why he thinks NFOs are a good idea. But first, for the other side of the story, Kalpesh, great to have you on the show. Thank you so much for joining us. Let's first set a bit of context and put into perspective why NFOs are seeing such great numbers right now.
Thanks, Tamanna, for having me on this show on NDTV Profit, and always a pleasure doing a show with you. The question about NFOs is that it's more of an emotional tag or an emotional, I would say, an attraction which investors have whenever there's an NFO or stretching the yard a little bit, on the direct equity and IPO, because it comes out with a lot of fanfare and a lot of attraction and a lot of, publicity given to the same thing. But what we really need to see here is that when do these NFOs actually, come into the limelight? And as we've been seeing probably from, I think last 2-3 years would not be wrong to say that, we are in a healthy bull run stage right now. And this is exactly the period where you will see a slew or a surge of NFOs being offered by the mutual fund houses. And it's pretty obvious, the AMCs are into this business of expanding their own, books and offering more products, more varieties to the investors, and also trying to capitalize on what a particular theme or what a particular category has to offer. And what more better time than when the going is good and everybody is in a mood to invest and the economy looks good and the results are great. So the mutual funds are pretty obviously right in their place to launch new NFOs, in a hurry. And it becomes more of a heap of NFOs on the investor's portfolio if he or she were to subscribe to, a majority of them. So the rationale has to be applied there, and that is where a bit of common sense by the investor himself, but more of a strict hand by the advisor needs to come in, that what is right for you or what is not right for you needs to be seen. So it's more of a phase of the markets where NFOs come out, and obviously like what you also mentioned, Tamanna, is that they come out with that, I would say a low-hanging fruit of NAV of 10 rupees being offered, which the investor feels that, it's a very cheap option, and because it's the starting rate of the face value of a mutual fund scheme. So all these points put together, it becomes an attractive proposition for the investor to invest in it. But again, the caveat remaining, does the investor need it in his portfolio or no? That is the million-dollar question, and that is what we need to address, I think, on priority.
Yeah, so let me put it this way, Kalpesh. Apple to apple, if it's a similar kind of fund, whether it's a thematic fund, a sectoral fund, a diversified fund, a multi-asset fund, a flexi-cap fund, would a a previous fund or one with a longer track record score above any NFO, just on the basis of the fact that you actually have some kind of an idea of what this fund's performance is like?
Absolutely, you hit it on the head, Tamanna. That's absolutely the criterion that a performing fund, a fund which has been in existence for say 3, 5, 7 year period and has already seen the various cycles of the economy or the markets per se, I think is in a much more stronger standing, in a much more better position to be, I think, seen from a perspective from an investment, because it's weathered many storms. Please understand that. And it's also, if we say that in mutual funds, what is the crux of mutual funds? It offers diversification. And that field also of diversification has now been long explored by mutual funds. So you used to have large caps earlier, you used to have multi caps, you used to have flexi caps, you used to have mid caps and small caps. So what's new? The question is what's new? So by having a surge of NFOs calling themselves a large cap or a mid cap or something, that's already there in the market. It's up to an investor and his advisor to sit together and find out what is right for him, which is the right performing fund. Does it match his goals? Does the fund house adhere to the benchmarks, what it has set for himself? So those things put together, like a seasoned, experienced fund would always, I think, have an edge over an NFO. And rightly said, one more thing which you mentioned here is that it's just the same thing which is being offered time and again, and for various reasons which I spoke in an earlier segment here. Why are they keeping on offering it time and again? One more thing which I would like to point out, Tamanna, is very important here, that post 2018 SEBI came up with a lot of categories which they opened up. They subcategorized the mutual fund arena completely, and that opened up spaces or slots for many mutual fund houses to fix their schemes if they didn't have a presence there. So fair enough, it was done with a lot of rationale. It helped a lot of, I think, dust to clear. But then I think that has ended now. So there should be no, I think, fresh, I think, excitement for anybody just hearing the word NFO. There has to be a theme of inventiveness or a thing which has not been explored in the past, which compels the investor to invest in an NFO.
But the flip side of that, Kalpesh, is if I go by that, then why should anyone invest in anything new? Where is the case for investing in NFOs in that case? Because you will be then restricted to just the funds which have enough of a track record. What does that mean for newer players that are coming into the market? Because there are quite a few of them. They will obviously come with a new thinking, a new outlook. Don't you think it will become restrictive then to only existing funds?
No, so I'll answer it in two ways. So first, let's talk about what is it when you should invest in an NFO. So for example, you talk about the Indian equity market space where you talk about large caps, mid caps, small caps. So it's the same ocean which everybody is trying to pick up his best stock or pick up his best script and pick up in a percentage or a rationale which he or she thinks is the right. That's the job of a fund manager. Now, for example, if you're offering something like international fund category or investing in something which is, say, for example, a NASDAQ theme or in a European theme, which is something different, which is not there in the Indian arena space, or you have the newer themes, so you have the innovative new age companies which have not been explored. Now that's something new, and that sets your mind thinking that, okay, should I take an exposure into that? What is the rationale behind it? That sets your mind thinking. And there should be always a question answer session between the AMC and the investor or the advisor to why should I invest in it? What is so new in it which compels me to do it? Second part of the question is that what about the newer players? So the mutual fund space has to get bigger. It has to cater more. I think this is the tip of the iceberg, what we are seeing, the 18,000 crore SIP book which we have. I think we have a lot more potential to do it. Newer players are welcome. We have a lot of unexplored space. But let the newer players prove themselves. My point is not I have no complaints against the AMCs launching new fund offers. They have their equal right to do that's their business in which they are. I'm talking about a buyer beware or a buyer caution or a buyer awareness type of a thing from the investor point of view, that let the fund house prove itself in what different is it doing and how is it adhering to the client interest and also 100% performing to the required calls.
We've been talking about NFOs on the show and discussing whether NFOs are necessarily a good idea as an investment option or not. I'm joined now by Alok Singh. He's the CIO of Bank of India Investment Managers. And, we want to get a different perspective to the entire discussion. Mr. Singh, welcome. Thank you so much for speaking with us here at NDTV Profit. Of course, the context is that you are launching an NFO yourself. It's in the process right now. But let me start with the broad picture, because the question we've been asking is, without a track record like existing funds have, are NFOs really the best bet for investors? What would you say to that?
If you look at, NFOs can be classified into two categories. One is basically there are existing funds of that category may not be managed by the same fund house or the same team. And there, basically, there can be a value add by the process they run, the way they look to manage it, and it could be a fund the concept which already exists. And there can be second category where it's a new category altogether or a new concept altogether. There, of course, there is no track record. So in first case, obviously, there is a track record of that category. What the fund house may offer is a new process or the way to manage it. But in the second category, yes, where there are no similar funds or the same concept does not exist anywhere, there somewhere, the leap of faith, depending on the concept which you are talking about, that is what the investor has to do. But at the same time, everything starts somewhere. So, you can't say that only I will invest when it is X years old and things like that.
Yeah. Having said that, I want to understand from your perspective. We've been speaking about on the show about a large number of NFOs hitting the market right now. And of course, that is a very clear characteristic of a bull run. Tell us about that perspective. Why do AMCs, why do participants want to launch a lot of NFOs right now, you included?
Yeah. So obviously there is, you may have seen more NFOs when the markets are doing good. That is also because, you get to raise money when the people have money. Typically, when the markets are not doing good, even if that investment is not that good, maybe people will not like to churn at that point in time, or, you're sitting on some mark-to-market losses. When the markets are doing well, people usually have more money. Most of the money is in profit, and they like to churn or look to evaluate new concepts or redivert, rebalance. These are the reasons because of which, typically the new NFOs or even IPOs come and people participate in that. In our case, we are doing a multi-asset allocation fund. While there are many multi-asset allocation funds which are existing right now in the market, but we are slightly different because we are a debt-oriented multi-asset allocation. Multi-asset as a concept need to invest in 3 asset classes up to minimum 10%. So we are doing debt, equity, and gold, where the debt is a larger portion. And the reason we are doing it primarily because for last 3 years, the markets have been quite good. People have made decent amount of money, and somewhere that the concept of risk is less appreciated. And we believe that, a debt-oriented funds also should be part of the allocation strategy, and that's why we are offering this at this juncture.
Okay, so fair enough. And, I want to thank you for joining this discussion, because while we're not focusing solely on your fund, we're talking about a larger picture and a larger issue, and not specifically, your fund. I just want to make that very clear. But I want to get Kalpesh's view on some of the points that Mr. Alok Singh has made. And Mr. Singh, please do stay on with us, because we want to present both points of view to our viewers. On the point that you sometimes have to take a leap of faith, Kalpesh, but then there is a new idea which is being presented as well. that seems like a fair enough proposition.
Yeah, fair enough. So exactly the points which Mr. Alok also mentioned, that in a bull run, the mindset of an investor is different, and that's why they would like to capitalize on exactly the same point which I mentioned. But the crux point here is that we are talking about just as a counter argument, and like what you rightly said, it's not against a particular fund or new NFO that I would like to mention here. But the thing is that we have a multi-asset fund. Or a large cap fund or a flexi cap fund, which is offered by all AMCs at some point or the other. And to each his own, the concept, the taxation part, and everything is more or less the same. The point is that the investor has to decide that I do not, and we have seen instances because I face clients directly where he might be having 3 or 4 multi-asset funds in his portfolio. Now, that is surely detrimental to his portfolio returns. You can't have 4 large cap funds. You can't have 3 small cap funds in a portfolio. And all that is probably if you see it in detail, when was this purchased? All of them would probably be, from the inception, that is from the NFO stage. And from the simple argument that it has been either hard pushed to him, or he's been attracted towards it, or he's probably been misguided, or we don't know the reason. Now, this is a major cause of concern for his portfolio, and that is where we financial advisors or planners who look at the portfolio returns on an overall, it's an overlap. It is not meant for reaching his financial goals, and it becomes more of a burden rather than an advantage in his portfolio. So this type of, I would say, a mixture or an assortment of funds in a portfolio, I think that is detrimental. And again, I would like to repeat here that with due respect to the AMCs, it's for the investor or the client to decide that which particular category or which particular fund of AMC he wants to patronize or select in his portfolio, and then he does the due diligence and then invests. Okay. Because then beyond that, he cannot stretch it.
Okay, so you're saying it's not necessary that a lot of funds in your portfolio is a good idea. Mr. Alok Singh, I want to get your perspective on, the question which is raised with NFOs, that they have a larger cost attached to them because they're newer funds. So it turns out to be a little more expensive for the investor. There is probably not obviously a track record. And if you go out looking in a market now which has a fair amount of depth like ours, you will always find another alternative with a longer track record. Would you say this is fair, or being a little harsh on NFOs?
Yeah. So you are right on the part that where the expense ratio structure exists right now. For a smaller fund, it can be slightly more than a larger fund. But frankly speaking, in a larger scale, that's a very small or a microscopic view. Because yes, while the other panelists has raised the point that there can be 5 large cap funds and 5 X funds in a portfolio, but that is all what we are talking about is allocation. See, selection also plays an important role. While there may be 30 large cap funds in the market, and there can be as number in each category, but does every fund perform as well? No. Even if there is a long-term difference of say 2-3%, which can be, if you look at on a compounding basis, even 1% extra compounding for next 10 years will make a lot of difference. While somebody may say that, okay, this one particular fund is giving 18, another is giving 19, but on the compounding side, it makes a lot of difference. So while I agree on the point that when we talk of the asset allocation, then obviously we cannot have same fund type as a large portion of our portfolio. We need to choose, but then the investor also needs to do the selection right. We always talk of allocation. We talk of, okay, invest X percentage in large cap, X percentage in mid cap, X percentage in XYZ category. But we rarely talk of selection, because selection makes a lot of difference as well. Because we have seen over the period of time, you look at 3-year, 5-year, 10 years track records of even the existing funds, they may have underperformed the best in class, and the person may be invested in not so. So that is an important thing which needs to be appreciated, and that is why the people need to look at it holistically, not just by the existence. Existence does not lead to performance.
Okay.
So we need to also look at ultimately whoever has given money or invested money is for the wealth creation, and the wealth creation happens not by virtue of just allocation. Selection also plays an important role.
Okay, fair point, fair point. So a very interesting debate here. It's not a one-size-fits-all. In some cases, an NFO might be a good choice, and of course, allocation also becomes key. But don't choose something just because it's new. On the other hand, don't ignore an option just because it's new. You will have to go into those details, and that is really the point that we wanted to bring across. Thank you so much, Mr. Alok Singh. Thank you so much, Kalpesh, for joining us on the show today. We hope this has been useful to our viewers when deciding where to allocate their money. Of course, if you want to reach out to us for specific queries on your portfolio, all of those numbers on your screen. Until next time, thank you for watching.